What if I told you a country just pulled off the biggest financial escape act in its history? This is Kenya News Update today. Coming up, you'll discover how Ghana is rewriting the rules of debt, moving billions away from Wall Street and into a new, controversial lifeline. And the twist? They're doing it with a strategy that could change everything for developing nations. Meet Ghana, a West African nation of over 35 million people. For years, it was trapped under a mountain of expensive commercial debt, paying sky-high interest to international bondholders. But as of the third quarter of 2025, something seismic has shifted. The government has executed a radical pivot, a complete realignment of its financial soul. But here's what nobody's talking about. This isn't just about numbers. It's a high-stakes gamble on national sovereignty versus global markets. The official data from the Bank of Ghana is in, and the transformation is staggering. While the total external debt stock stood at approximately $29.53 billion in September 2025, the composition tells a revolutionary story. Compare that to the $28.41 billion recorded back in 2022, the pre-restructuring period. The government attributes this shift to a successful debt restructuring program and a deliberate, aggressive policy to chase what they call concessional borrowing. The goal? To slash interest rate risk and crippling debt servicing costs. A government statement puts it bluntly, the government is moving to minimize risks in the public debt portfolio to ensure long-term sustainability. And the evidence is in the numbers. Here's the part that will blow your mind. Multilateral debt, that's money from institutions like the IMF and World Bank, exploded. It grew from $7.76 billion in 2022 to a massive $12.18 billion by the third quarter of 2025. That's a tidal wave of new funding from a very specific source. But wait, there's more. Bilateral debt, meaning loans directly from other governments, rose even more dramatically. It skyrocketed from just $1.19 billion to a staggering $5.74 billion over the same period. This surge followed the signing of a landmark memorandum of understanding with the Official Creditor Committee in early 2025. So who are these new lenders stepping in? And what are the strings attached? This is where the story gets controversial. Because to get this money, Ghana had to walk away from the open market. Exposure to international capital markets and commercial creditors plummeted. Commercial creditor debt fell from $3.9 billion to $2.71 billion. And the biggest symbol of the old way? Eurobonds. Debt held in Eurobonds and other capital market instruments crashed from $13.1 billion in 2022 to just $8.9 billion in 2025. This marks the direct impact of a colossal $13.1 billion Eurobond restructuring completed in late 2024. Ghana essentially told its private bondholders, "We can't pay you the old way," and cut a new deal. The implications are huge. For Ghana, it means lower, more predictable payments. It means breathing room, but the controversy is real. Some analysts call this a smart move towards sustainability, trading volatile market debt for stable, long-term partnerships. Others see a dangerous dependency, swapping one master for another, potentially trading financial flexibility for political influence from its new bilateral partners. The unanswered question hangs in the air. Is this a blueprint for other struggling economies, or a cautionary tale of swapping short-term pain for long-term strings? Do you think moving from Wall Street to government lenders is a smart escape or a risky trap? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news on the global financial shakeup.